gas over to telcos and consumer goods. Let's start with MTN. MTN Nigeria released its full year 2020 financials on Sunday, showing top-line revenue climbing 15% to 1.3 trillion naira. Operating profit for the year 2020 up 8% to 462 billion, while the company's net profit ever so slightly above 2019 levels to the tune of 0.9% up 205 billion naira. Let's look at Nestle now. Nestle Nigeria released its full year 2020 earnings on Friday, showing revenue barely above its 2019 performance, up 1.07% to 287 billion. Higher cost of sales ate into the company's gross profit, which was down 7%, while increase in admin expenses and significantly higher finance costs ate into the company's profit before tax and profit after tax, both down in the 14% region compared to 2019. Joining us to review these earnings results is Philip Anegbe, Head of Research at CardinalStone Partners. Philip, good morning to you. Thank you so much for joining us. I want to start with MTN. Can we break down that 1.3 trillion naira in top-line revenue for MTN that they brought in 2020?
Yeah, thank you very much, Rotus. I think before we go to breakdown, it's important to note that it was another ground-breaking or record-breaking year for MTN. Posted revenue of about 1.3 trillion. Is the highest we've seen from any listed entity in Nigeria. In terms of a breakdown, we have it that voice revenue accounted for about 57% of the revenue. I think data constituted about 25%, while interconnect and roaming revenue accounted for a further 10%. You also have some other contributors in the forms of like SMS revenues and some other smaller category. I think the interesting thing to note on the revenue front is that the company continues to march on, powered by very robust growth in data revenue. So we'll continue to see that switch to data-enabled communication globally. It continues to subsist, and it's been the recurring theme in MTN's numbers so far in recent quarters. So solid growth on the revenue front for MTN.
Thank you for that, Philip. I did notice, as you mentioned, SMS was the only line item. That's on our first revenue breakdown. The SMS part was the only, there it is, was the only part that was down, I think, about 8% compared to its levels in 2019. So what does that mean? That's just a reflection that Nigerians didn't send as many SMS messages as they did in 2019 compared to what they did spent on data and voice.
Yeah, absolutely. And what it tells you or confirms is that switch to data-enabled communication. People now sending messages via WhatsApp and other platforms as opposed to using traditional SMS medium. So that was largely reflective of the performance on the revenue front for 2020.
All right, thanks, Philip. Now, looking at the costs, I think direct network operating costs increased by 26% to 310 billion naira. What do you think constituted or made that up?
Well, in terms of direct network operating costs, you have BTS leases. I think it constitutes about 73% of that cost bucket. And then you have network maintenance that accounts for another 16%. But we think that the interesting thing or discussion points on cost is that it was a critical driver of margin compression for MTN. And that's on the back of currency depreciation, naira depreciation, because most of their costs leading of the dollars. That the company also switched the rate for converting its lease expenses to NAFEX as opposed to using the CBN's official rates. And that sort of actually drove pressures from a cost standpoint. So that's really our take on the cost development, and it's likely to subsist this year given the recent currency changes that we are seeing.
Great stuff. Well, what do you make of the dividend announcements from MTN?
Yeah, decent dividend announcement relative to last year. I think it's over about 19% compared to last year. And that's capable of actually enduring a few investors to the stocks, even though we note that the stock is currently trading at above our target price of about 168.28 naira. right? But then very strong announcement that may actually excite you investors.
All right, and what's your take on MTN's stock as we kick off the third month of 2021?
Yeah, in our view, we think that 2021 is likely to be a relatively difficult year for MTN. The first is you may not see that much traction in terms of subscriber growth, given the recent restrictions on registration that we've seen. In addition to that, you are likely to see pressures come in the form of currency depreciation, higher VAT, and of course, sustained double-digit inflation, which is expected to only get worse in 2021. I think if you look at prior results of the company, they usually guide to 10% currency repricing, leading to at least, say, between 200 to 300 basis point margin compression. So if you go by that, you find out that 2020 may be a difficult one for margins for the company. But then we see relatively better resilience compared to the 2015-2016 period, given that it's been more proactive in terms of trying to link NINs to registered SIMs in Nigeria over the last couple of months.
Thank you for that, Philip. So what about the wider telecommunications sector? As one of the bright spots for Nigeria's GDP in Q4 full year. Does that carry over into the new year? Or if you're seeing struggling for MTN, does that mean the telco sector at large will struggle in 2021?
Yeah, when we talk about struggle, we are talking it in terms of what we expect for margins, right? As shown by MTN over the full year period, they were still able to grow PAT by about 0.9%. So it's better to get that perspective. But we think that from a GDP standpoint, which measures output or the level of activities, you will still see telecoms actually do well, right, on a year-on-year basis. But what we are saying is that the growth in telecoms outputs or GDP is likely to be more contained relative to what we saw in 2020 because there's restriction on the registration of new subscribers. So, and you plot telecom GDP with subscriber growth, you see that there's a very strong relationship. So that may actually reduce growth in telecom GDP in 2021. And of course, 2020 was a very high base in terms of growth, so that should also come into play. So overall, we think telecoms is likely to remain very important to Nigeria's growth traction in the coming year, as is oil, right, and other important sectors of the economy.
Great stuff. I want to quickly move to Nestle. I guess it was a slightly different, not as robust in their earnings compared to MTN because they're in consumer goods, food, and so on. What do you make of Nestle's performance for full year 2020?
Well, for Nestle, the performance was relatively weaker, right, for 2020. And two key factors were increases in costs and, of course, increases in finance expense. Right, I think costs rose as a result of the currency depreciation, and of course, you had reports of trade route disruptions, all amounting to higher costs or a surge in costs of some key raw materials. I think what still was that there was the issue of availability of some raw materials, and even availability of FX was a problem. You add to that the fact that they were only able to grow revenue by about 1%. Right, when you are not growing revenue strongly and you are facing significant costs, it can only mean one thing, and that is significant margin contraction. And that was what played out for Nestle in 2020. I think on the finance costs, we note that there is a sizable driver coming from net FX losses. I think they reported net FX losses of about 1.7 billion, and that was a really big drag on performance for Nestle.
So compared to the telecommunications sector, how would you describe 2021, I guess, for consumer goods looking ahead?
Well, for consumer goods, it's important to make a distinction between consumer goods companies that are big in B2Cs and others that do primarily B2B. For B2C companies, we expect them to actually struggle on border means imported competition. To see the likes of Dangote Sugar shed some market share on the back of that, while those involved in B2Bs may be relatively stable compared to their B2C counterparts. So all in, we like consumer companies that have demonstrated ability to adapt to changing times through internal restructurings. We've seen a few consumer goods companies actually transform previously margin dilutive or loss-making arms of their businesses into key revenue drivers in recent years. And flour mill comes to mind when you are talking about companies like that. You look at what they've done in edible oil and animal feed segment, you see it's been really impressive. I think it contributed the most to PBT accretion over its last 9 months result or period.
Great stuff, Philip. So I guess what do you make of, what's your take on Nestle stock then, if as we look towards the rest of this year, how would investors, or rather you folks at CardinalStone view it?
Well, for Nestle, we're thinking that you may likely see some pass-through from FX losses, pressure interest expense again in 2021, given that about 84% of their debt is dollar denominated, so that's sizable to drive some FX pressures. However, we are expecting the company to rebound in terms of operating performance, powered by the reopening of business activities getting back to prior levels, as well as the low base from 2020. It's important to note that the 2020 earnings was the lowest in about 3 years. So there's a low base, and that low base effect may actually drive some recovery from the operating standpoint. And of course, they are doing a lot to actually source internally. So all of that may come to play to actually drive some sort of resurgence in operating performance that could help offset FX-induced pressures on interest expense. So Nestle is likely to come out of the waters in 2021. We still see scope for upside on the stock. And it's a stock that historically has delivered on the return on equity front, boasting, I think, about the highest return on equity of the Nigerian equity space. So we have a hold recommendation on Nestle, and we are expecting the company to actually bounce back relative to their performance of 2020 that was really, really COVID-induced.
Great stuff. Oh, so okay, hold recommendation on the stock. Can you reiterate what you had for MTN? Was that a buy, sell, or hold?
Well, we think that MTN is currently trading at above target price, which would imply that investors may look to actually sell to take some profits on the stock. And they could actually ride the excitement about the recent dividend declaration because that could open up opportunities to actually make some decent returns on profit taking on the stock. So I would say wait to ride the excitement about dividend and take profits as the opportunity presents itself.
Great stuff. Philip Anegbe, head of research at CardinalStone.